Hello and welcome to this in-depth book summary of the influential personal finance classic Rich Dad, Poor Dad by Robert Kiyosaki. First published in 1997, this #1 bestseller has sold over 41 million copies worldwide, making it the top-selling personal finance book of all time. The reason Rich Dad, Poor Dad has had such an enormous global impact is due to Kiyosaki's philosophy on how the wealthy build their fortunes by leveraging passive income streams and investing in income-generating assets rather than solely working for money as active earned income. Over the minutes, I'll be thoroughly summarizing Kiyosaki's key concepts, teachings, insights, and wealth-building principles so you can begin implementing his unconventional financial advice to escape the rat race of chasing money, stop trading time for dollars, and ultimately achieve sustainable financial freedom. Let's dive deep into Rich Dad, Poor Dad. Part 1: The Cash Flow Quadrants. Where do you want to be? Kiyosaki introduces the important foundational concept of the cash flow quadrants to categorize people into 4 main groups based on how they earn their income. E. Employees who have a job and trade their time for money, often in exchange for a salary or hourly wage. S. Self-employed who work for themselves and own active businesses that require their direct involvement to operate, like consultants, freelancers, and sole proprietors. B. The business owners who own passive businesses that can run and generate income without their direct day-to-day effort due to leverage of systems and employees. I. Investors who receive the majority of their income from returns on investments like real estate, stocks, bonds, commodities, etc. Kiyosaki advocates that the path to true financial independence and freedom comes from moving beyond solely trading time for money as active earned income in the E and S quadrants, to instead generating more passive and portfolio income from assets in the B and I quadrants. Part 2: Why you shouldn't just work hard for money. Conventional middle-class advice preached by financial experts and parents focuses almost entirely on the importance of getting a stable, secure high-paying job or career, putting in long hours, and working extremely hard to earn more money. But Kiyosaki argues convincingly that this approach exclusively results in higher taxes, more expenses, and greater dependence on active earned income from your efforts. It provides little freedom. Instead, Kiyosaki strongly recommends first buying income-generating assets, starting, acquiring, or investing in appreciating businesses, real estate, stocks, bonds, royalties, licenses, or commodities that put money directly in your pocket month after month in the form of passive income, rather than solely working for your money as active income from your job. Let your money work for you through assets. The wealthy get richer because their money works hard for them while they focus their efforts on higher value activities. Part 3: Gaining financial intelligence allows your money to work smarter. Kiyosaki asserts that the main reason most of the middle class continues to struggle financially throughout their lives is because they spend 40-plus hours a week for decades working for money, whether at a job or self-employed, but never properly develop the financial intelligence and literacy needed to make their money work smarter for them. Schools and higher education teach nearly every subject, yet fail to provide any real education on money management, personal finance, investing, markets, entrepreneurship, sales, or all the important skills needed to grow and protect wealth. Becoming financially literate, gaining financial knowledge, and increasing your financial IQ should be mandatory. Learn accounting fundamentals, understand financial markets and investing strategies, educate yourself on money mechanics, study entrepreneurship and sales methods. Financial literacy allows you to strategically leverage money as a powerful tool to solve problems and gain freedom. Ignorance around how money works leads the middle class into mindlessly accumulating burdensome debt and liabilities, while the wealthy focus strategically on acquiring income-producing assets. Learn how money works, or it will control you. Part 4: Adopting the empowering mindset, overcoming fear and scarcity. Kiyosaki emphasizes that in order to join the ranks of the rich and wealthy, you must move beyond fear, uncertainty, negative conditioning around money, and limiting beliefs about what's possible. Fear of losing money blocks creativity and stops you from exploring new bold ideas. The poor and middle class often work primarily motivated by fear and scarcity, fear of not making ends meet, fear of losing their jobs, fear of falling behind on bills. Instead, consciously adopt an abundant, opportunity-seeking mindset. With financial intelligence guiding your decisions, put the awesome power of leveraged money to work hard for you rather than just working for money as your sole source of income. Be willing to take calculated risks with your investments and make your money work harder. The wealthy focus on having their money work for them 24/7 through assets and business systems rather than trading their hours for dollars. Live far below your means, avoid needless debt, and heavily invest the surplus into income-generating assets month after month. With this mindset shift and a career focused on investing rather than employment, true financial freedom is possible regardless of your current salary. Think big and make your money work hard for you. Part 5: Retire Young, Retire Rich, The Power of Passive Income. Kiyosaki bluntly states that the conventional path taught to the middle class of working for 45 or 50 years before finally retiring, often broke and still stuck in a job well into old age, is not only needlessly arduous but also foolishly throw away your most youthful, energized years just to retire comfortably decades later. The wealthy instead retire very young and very rich by having their investments provide more than enough passive income to cover their ideal lifestyle year after year in perpetuity, free from active work. With the right financial knowledge and mindset, you need much less money to comfortably retire much earlier than you think. Start building your investment portfolio immediately, let the power of compound interest work its magic for decades, invest heavily in high-return assets, and profit massively. By leveraging the potent force of passive income from assets, you too can retire rich, retire young, and live off the passive cash flow forever. I hope you found value in this detailed summary of Rich Dad Poor Dad by Robert Kiyosaki. The timeless lessons aim to fundamentally change how you view money and investing forever. Develop true financial intelligence, make your money work far harder for you through assets than just trading time for dollars, take educated risks on income-producing opportunities, and claim the freedom and abundance you desire.